Kumba reported a 4% decline in revenue to 34.5 billion rand. This is for the 6 months ending in June of this year. The revenue dip is linked to iron ore prices remaining under pressure despite a 3% increase in sales volumes. Now, U.S. tariffs and retaliatory tariffs from China have resulted in uncertain and volatile iron ore markets, with prices down 7.4% in the past year. The company is pinning its hopes on new technology to improve margins and increase premium iron ore extraction at its Sishen mine in the Northern Cape. Kumba Iron Ore Chief Executive Mpumi Zikalala joins us now to discuss results and the current trade climate. Mpumi, welcome again to Newzroom Afrika.
Thank you, Matteo. It's great to be here again.
Now, before we get into the meat of the results, I'd like for you to share Kumba's assessment of the current trade climate with higher tariffs expected at least on the 1st of August, and what kind of exposure you as a company have and the industry, the iron ore industry.
Yeah, thanks, Matteo. I think a couple of things. From a Kumba perspective, we do not actually sell our iron ore to the United States. But as we know, the overall global trade is interconnected. So clearly, we are very much interested to see where things will land with regards to the US relative to the other areas that we sell our iron ore to. The couple of areas that we are interested in include China. You spoke a little bit about the challenges in China. The bulk of that is actually linked to the weakness that we've seen insofar as the property market is concerned in China. And production has remained fairly in line in terms of still making production in China. So essentially, with a slowdown in the local demand in China, that has actually seen us realizing an increase in exports of steel outside China. One of the things that we then track very closely in line with that is the steel production that goes from China to the US. It's there, but it's not significant, but we will stay close to this area. The other areas that we sell to include Europe, Japan, and South Korea. And again, from a global trade perspective, we are staying very close to what will be happening within the tariff space. It's too early for us to say where exactly we will land. As a business, what we have decided to continue focusing on are the things that we can control. And certainly, we can focus on the cost competitiveness of our business, and you would have seen that we've been able to keep our costs flat at $39 per ton, which was the objective that we had when we went through our reconfiguration last year. And secondly, we've continued to deliver high quality or high premium iron ore, which is what has led to us being in a space where, even though we've seen a weakness in terms of overall markets, we actually got to realize an 8% improvement in terms of our average FOB price by virtue of the quality of our product.
Let's get into those results then. There were a few wins in terms of sales. Sales were up 3%, but revenue disappointing as iron ore prices remain subdued. How do you play around in such a market that's highly volatile? You're producing a product, as you say, that's very, very premium, so things are going well in terms of operations. But how do you find yourself in a place where you try and sell more of that iron ore? Are you looking at other new markets?
So certainly a couple of things in this front. So you mentioned it, Matteo. So one is we saw a 3% increase in our sales volumes, and that's credit to the partnerships that we have in place with Transnet, as well as the Ore Users Forum and the broader National Logistics Crisis Committee and government. We are seeing more stability in terms of that performance, but it certainly is not at our contractual levels. So there's still more work to do. But as I've been saying, we need to recognize the stability that we are seeing because it is actually yielding, or it is the one that yielded a 3% uptick in our sales volumes. And then from a global trade perspective, clearly, ultimately, we look at selling our high quality iron ore to customers that we have strategic relationships with. And we don't just look at the quality aspects, but we engage with them on how they can actually utilize our iron ore better for the benefit of their businesses. So 2 quick examples. The bulk of our product is made up of what we call lump. And when our customers use lump, they get to realize a 10% reduction in their carbon emissions. and they bypass one of the steps in the steel-making process, which actually assists with the reduction of their costs. And we capitalize on that. And then the second one is the aspect that you briefly referred to, which is around the fact that we are investing in new technology at Sishen mine, which will help us better improve the quality of our product.
That was the CEO at Kumba Iron Ore, Mpumi Zikalala.